The TSX cautiously rebounding, but it's been a rough week. Let's get more from Nate Thooft, Chief Investment Officer and Senior Portfolio Manager at Manulife Investment Management. Nate, thanks very much indeed for joining us. What lessons do you think we learned this week?
Great to be here, Andrew. It's been a busy week. Certainly we've seen a market that's trying to find its footing. We went into the year thinking there'd be more volatility this year. Certainly that's been the case. The market was set up for a very kind of positive backdrop. We had an environment where growth expectations were pretty good. Earnings expectations were very high. We had fiscal accommodation, monetary accommodation. So there was a high level of complacency in the market. And the markets were fairly richly priced, as in they were priced for a pretty good backdrop. Well, it turns out when you're priced for a pretty good backdrop, any type of concern, such as overspending in AI or geopolitical, causes more volatility. And that's what we're seeing over the course of the last week or so, is this uncertainty around various themes is percolating in the market, which is creating higher anxiety and higher price volatility.
And inflation generally not a threat or not an imminent threat?
Our general view on inflation is it's better than people probably expected. We have a lot of offsets to some of the inflationary concerns. Most notably, the biggest offset globally, particularly in the United States, is that shelter inflation, things like rent, housing, is offsetting other aspects of inflation. So there are inflationary concerns out there, particularly when it comes to lower income households having to buy their necessities. But when you look at the bigger picture and the type of data that something like the US Fed looks at, it tends to be offset by some of those shelter dynamics offsetting inflation. So overall, we think the inflation backdrop from a pure data perspective is in an okay spot to allow central banks across the globe to continue to accommodate on the margin.
Geopolitics always present, but we haven't seen any alarming headlines in the past few days anyway about Ukraine or Iran.
Yeah, generally speaking, as we've seen throughout history, geopolitical concerns can have a very short-term impact on the market. The markets tend to look through it very quickly. And in many cases, some of the geopolitical concerns that are on the table right now, most of the recent information is slightly better. I mean, the Iran situation, it is what it is, but some of the more recent news is more along the lines of we're going to come to some type of solution. Similarly, when it comes to tariff dynamics, tariffs last year were a big scare for the market, but the worst case scenario did not come to fruition, even though we still have ongoing, percolating tariff dynamics. We haven't seen the worst of it actually flow through to the market. And so we're looking at the geopolitical concerns as a volatility driver, but we do think the market ultimately looks through most of those concerns and focuses on underlying fundamentals.
And there's still a decent outlook for profit growth south of the border.
That's probably the biggest positive theme. When you look through the corporate level and you look at the quality of earnings, the expectations of earnings, and the underlying growth backdrop, it remains very favorable. And this is why pretty much all of Wall Street went into this year expecting higher equity markets, because the backdrop for earnings is very favorable. Now, while we believe that's true, the market is already priced for a lot of that. So we can't afford a lot of disappointment on the earnings front because the market is already expecting a very healthy earnings backdrop. And we believe that as well. So we're a bit more muted in our return expectations because we do think the market has generally priced for a fairly positive backdrop when it comes to earnings reports throughout the next 6 to 12 months.
But you do think that in some cases, risky assets are priced near perfection. I mean, Bitcoin is down from its record high, of course.
Yeah, one of our key themes for this year is to focus a bit more on quality. Most of the last several years, quality as a factor has been ignored. Things that have worked are momentum, high growth, riskier assets, things that are highly attached to the various thematics out there, such as AI. This year, we think investors will be a lot more discerning, and we've already seen that, where we've seen opportunities to take chips off the table in some of the things that have worked really well, that are already priced to perfection or beyond perfection, and start to recirculate that into areas that are more high quality and are more consistent from an earnings perspective, and arguably, in many cases, are trading at better valuations. And so there's quite a few opportunities to high grade your portfolio portfolio while still having the opportunity for upside and avoiding some of the riskier areas of the market they're targeting.
What are your colleagues or what are investors telling you, though, about the big AI stocks? Are you detecting a theme there?
For the AI stocks, the AI theme is real. The problem with it is not everyone can win. And we already have seen people sniff out the fact that there's going to be some winners and there's going to be some losers. And so there's a difference when it comes to the outcome from a stock performance perspective between those winners and losers. And we also believe there's going to be a growing theme away from just the companies that are enabling the build out of AI towards the companies that are truly going to benefit from AI by reducing their cost structures, improving their margins, improving their growth prospects. And I think this is a year where the discernment on AI between the haves and the have-nots are going to be a lot higher. We think it's still a strong theme to be invested in, but we think it's going to require a lot more attention on focusing on the winners and the true beneficiaries versus just anyone that mentions the word AI, which is what worked in 2025.
Nate Thooft has been our guest. Nate is Chief Investment Officer and Senior Portfolio Manager at Manulife Investment Management. Thank you very much indeed, Nate.
Thank you.